Hello there, you're watching Your Trades on ET now with me Snehisha, and with me as always is Priyanka Uppal. And Priyanka, good day coming in for the markets today, not much to complain about.
We are trading near record levels.
Absolutely, we opened at a record high, surpassed that 24,600 mark, but we've receded slightly from that point, but not much to worry about and not much to complain about also when it comes to today's trading session. Because if you take a look at Nifty, 24,586 is where that index is closed. So, and 0.3% higher. So, very good moves coming here. Sensex also comfortably above 80,600. India VIX, slight bit of a spike seen today, 3.4% higher. Nifty Bank also ended the day with more than 0.3% uptick. So good moves coming over there as well. Overall, good moves coming in from the benchmark. So when you take a look at the broader markets, you have small cap with gains of 0.5%, but it is Nifty mid cap that has actually stolen all the show today. Closed with a gain of more than 0.8%. That's Nifty mid cap for you. And your top mid cap gainers today were Macrotech developers, IDBI Bank, Bank of Maharashtra, Apollo Tyres, Indian Bank. And while we're talking about banks, I also want to quickly flag off Nifty PSU Bank. It's your top sectoral gainer of the day, 3% or rather more than 3% gains coming in on Nifty PSU Bank today as well. Very stellar moves coming in. Nifty Pharma, Auto, FMCG, all your indices in the green today barring IT. IT was the one that was putting slight pressure on the markets today. Your LTI, Mindtree, Coforge, Tech Mahindra, TCS, Persistent, Infosys, Wipro, all of these IT names have closed in the red today. But all in all, PSU Bank's your biggest gainer. IT is your biggest loser today, and overall markets are looking pretty good to talk about. Now, even when you talk about some of the biggest gainers and losers today, you have Godfrey Phillips. What stellar moves coming on that stock as well, 17% higher. IOB, MMTC, KSB, NLC India, very good moves coming in anywhere between 6 and 10% on all of these stocks. On the flip side, Sundaram Finance, one of the biggest losers today, 4.5% cuts coming over there as well. Brigade, Chalet Hotel, Sonata, Realtel, Garden Reach, all of these stocks in the name. And surprising to see Garden Reach, in fact, on this side of the market because of the rally that defense stocks have seen recently, but slight bit of a correction being seen on Garden Reach as well, Priyanka, today.
All right. In fact, many other subsectors, if you see, spaces like tire stocks, because MRF has taken a price hike and we've seen the entire space buzzing. You talk about Apollo Tire, Balakrishna, or even MRF, they all were up in the trade today. Couple of reasons here, because rubber prices have they have declined in past few weeks, and that's also one of the reasons. From March highs, we are down about 11%, and of course the price hike which the companies are taking, that is one reason that the entire space was on the move today. Then we have a budget exclusive coming in. In fact, the natural gas and the ATF, government has initiated process to bring natural gas and ATF under the GST ambit. 2 meetings have already been done, and the finance ministry hold meetings with the oil ministry. So we're gathering more on this piece of news. Prakash will join us later in the show to talk more in this space. But then couple of spaces that we've seen on the move. Of course, we've seen a couple of brokerage stocks on the banking. The way clearly the PSU banks made a comeback today, and private banks, and especially let's not forget, Snehi, this is the week which is the earnings heavyweight week. Reliance to report numbers this week, HDFC Bank on the weekend to report numbers, and of course the host of IT stocks. IT stocks were little on the lower side today, maybe some sort of profit booking what we saw on the space, especially after a 1-month record rally that we have seen in IT stocks. But a couple of names from the pharma space, the stocks like Aurobindo Pharma, possible buyback news, and in fact a lot of other pharma stocks which were in action today. But then how to trade the markets from here in terms of index, and of course what are the specific recommendations here. We have our expert joining in to talk about it, but before that I hope we want Zomato also, right, Sahi?
Right, so Zomato also one stock to talk about today, Priyanka, because the hike in platform fee, right? Zomato and Swiggy both, but let's talk about Zomato since it's the listed one. So 3% higher coming on Zomato as well today.
Yes, correct. So that 1 rupee, the hike of 1 rupee means around about 20% of hike, and what analysts are also anticipating, there could be additional incremental revenues of 85 to 90 crore coming in because of this platform hike. Milind Vasudev joins us, senior technical analyst from Arihant Capital, to talk on the markets now. Milind, welcome. Tell us how to trade the market. Every time we think that it's a record level, market now surprises positively by giving us another record level. How to trade it? Would you still trail your stop loss and hold your position, or now banks have since started participating, so we have a reason to hold our long positions?
Good afternoon. If you see on the daily chart, if you see Nifty is showing a series of narrow range body formation, but with high formation. So this clearly reflects that the undertone in the market is positive. Even the breadth of the market always remains on the positive side. So this shows that there is a broad-based rally which is going on in the market. Last time I was on the show also, I had mentioned that clearly that we are working with the targets for Nifty somewhere around 24,700 to 25,000 levels. Now, this is a buy on decline market. And even if you see for tomorrow's trading session, there is a good support at somewhere around 24,475 and 24,380 levels. So even if we open down lower in the morning session, then again we will see some kind of a buying happening over there. Even if you see Bank Nifty is making a strong rounding base pattern on the daily chart, which clearly suggests that Bank Nifty is heading higher towards, say, somewhere around 53,000 levels to 53,300 levels. So one has to trade with positive bias, and buy and decline strategy should be adopted in this market.
Buy on dips is the strategy coming in, and that's the call of the hour for the markets coming from Million. But Million, also tell us that amid a market like this, where are you going to be deploying this buy on dip strategy? Have you seen a recent correction in any stocks that you now want to pick, or are you bullish on stocks that you feel like are going to have some upside going ahead on the price front at least?
See, we are tracking Lupin. If you see, it's clearly Lupin is showing sign of strength. 2 weeks back only, Lupin had given a clear breakout on the weekly chart, and we are very positive on Lupin. So Lupin currently trading somewhere around 1834. Keep a stop loss of 1790, 1900 to 1940 could be achievable, and in couple of weeks' time. The second stock is from FMCG sector, that is Colgate, which is currently trading at 3094. Keep a stop loss of 3000. Target would be 3274 and 3364 in couple of weeks' time.
Milind, is there a margin of safety that lies with the defensive space that you've picked both pharma and FMCG? Because there are many sectors which are on a roll.
See, no doubt, I know that IT last week only made a good move, and it is showing some kind of strength. And today, little bit it was subdued. But yes, even if there is a big event budget next week, so if there is a volatility in the market, then the defensive stocks are always better.
Understand that. Thanks very much. We'll let you go on this, Milind. So 2 stocks coming in from the defensive pack. But then Srishti also joins in with her set of stocks. Srishti, where do you see the breakout today? Many stocks on the roll.
Well, certainly, but we have picked 2 counters where we wish to highlight breakouts. And first up, let's have a look at SBI Life. This was one of the top gainers in Nifty 50 today. But indeed, quite an interesting chart. If you will see, that's a rounding bottom breakout happening for SBI Life. And what we have seen, the stock also touched its all-time high levels in today's trading session. Why the breakout? Because earlier it tried to make an attempt move above that resistance of 1570, and after so long, the stock was finally successful. From the word go, the stock actually just built on to the gains all throughout the day. More than 3.5% gain coming in for SBI Life and trading way above its 20-day moving average now, but very well supported by a long build-up on the derivative side. So this is the first stock that we wish to highlight, SBI Life and all-time high levels. We're moving on to the pharma space then, and Abbott India was one of the stock that was a standout in today's trading session, though the pharma index is at its all-time high. But Abbott India, here too, we managed to spot a rounding bottom breakout. The stock did manage and took a support exactly from its 20-day moving average, taking a bounce from there and managed to move above that resistance of 28,500 and hence the breakout. So these are the 2 stocks on the breakout side. Back to you.
All right, Srishti, SBI Life and About India, thanks for pointing both of those stocks out on the breakout side. But let's move on, talk about the word from Wise and his first ever on-air interaction since Quant Mutual Fund came under SEBI's lens. We caught up with Sandeep Tandon exclusively today. And PSU counters continue to be investor favorites, with defense and railway stocks leading the charge when it comes to returns this year. But how has Street's view of the sector changed from June lows compared to now? And now Sandeep also maintains a constructive stance on this sector. Let's go across, listen to an excerpt from a chat we had with him earlier today to understand the rationale behind this call.
PSUs were relatively cheap. They are fairly liquid. If I want to exit or build a position in any of the PSU, the liquidity is extraordinary. So which was not the case few years back. So I will like to play this thesis. When that's the reason we went overboard and build a large exposure or maintain our large exposure toward this space, because they are fairly liquid, fairly attractive in terms of valuation point of view. Impact cost was on lower side, and they were trading in the neglected territory. It was in September 2023 itself when you saw extreme sort of neglected phase and some capitulation happened, something similar happened the beginning of the year also, when the majority of the analysts downgraded by the end of first quarter of 2023, okay, 23-24. That's the time we saw cap. But I will also agree that when you look at from the earnings visibility point of view or traction point of view in the business, still on the lower side. Okay, so because cost cutting happened, margin expansion happened, and US market has also recovered, so some signs of early signs are there, and that's the reason since the stock was trading in the most neglected territory and they have recovered significantly. We have been I will not say I'm extraordinarily bullish in this space, because we see that risk adjusted opportunities are far superior in other sector, because this is a more of a pullback rally, more of a reflex rally. I will not call it that something has changed from a longer term perspective. So we are constructive, but we are not as optimistic for the sector as it was there in September 2023.
Not that optimistic on IT, but still maintains his constructive view on PSU. And let's not forget, he was amongst few of them who actually got the right trend, the early trends in PSU space. PSU space, right? Let's take a short break here. More to come on the other side of the break. We get you the derivative action and the big story. Don't go anywhere.
India is poised for a leap like never before. This Budget 2024, ET Now invites you to witness our nation's bold journey from ambition to achievement.
An approach to development that is all-round, all-pervasive and all-inclusive. We are working to make India a Vikasit Bharat by 2047.
Experience Leap to Leap to uncover the strategies, the policies and the vision to shape India's future. From market movers to everyday heroes, see how Budget 2024 will impact lives. Join us as we chart India's course towards unmatched growth and leadership. Budget 2024, Leap to Leap, only on ET Now.
PhonePe proudly presents Share.Market. Open a Demat account by 31st July and get zero brokerage till 31st December on FNO and intraday, equity delivery, wealth baskets, and zero account opening fees. Download Share.Market and start investing. Investments in the securities market are subject to market risks. Read all the related documents carefully before investing.
छत टपक रही है।
अरे शिफ्ट करने वाले हैं ना पापा, बस घर मिलने की देर है।
इसीलिए तो घर मैजिक ब्रिक्स पे देखिए, प्रॉपर्टी की पूरी इन्फॉर्मेशन विद एक्सपर्ट एडवाइस
और 15 लाख से ज्यादा प्रॉपर्टी ऑप्शंस हैं।
गुड, एटलीस्ट मेरा घर तो लाखों में एक होगा।
ब्रो सपने स्किप नहीं, सिप करो। सिंपली विजिट kotakmf.com/MrSIP और सीखो SIP के साथ कैसे हो सकते हैं आपके सपने पूरे सिस्टमैटिकली।
और आप? म्यूचुअल फंड निवेश बाजार जोखिमों के अधीन है। योजना से जुड़े सभी दस्तावेजों को ध्यान से पढ़ें।
Welcome back. You're watching Your Trades, and now the action from the derivative space. Again, now we see a long build-up on Nifty and Bank Nifty both. In fact, Bank Nifty banks have come back into action now. PSU banks have clearly outperformed the private space banks today. The calls which were active today, now the higher calls, 24,700 strikes like these also are seen to be the maximum of the call buying action has been seen on these strikes. 24,600 happens to be the second highest open interest based strike. Put buying, the support has also risen. Now the support is at 24,500, 24,400 because maximum of the put buying, put writing has happened here. So that's what the entire range looks like. We are pretty comfortable above 14 level on VIX also from derivatives.
All right, let's move on then from derivatives and talk about a space that was a bust today, and that is the entire pharma pack. Now, pharma stocks were in focus on the back of several domestic as well as global triggers. Earlier in the morning also, we spoke about all of the US FDA action that could potentially affect pharma stocks both positively and negatively. And Sharad Dubey is joining us with all of those details. Sharad.
Well, as the Nifty Pharma index is at all-time high levels, and the entire index is up almost 24% this year, and on one-year basis it's up almost 48%. The key triggers for the pharma index, they include the superior US market growth expected, especially in the first quarter itself, a double-digit growth. Also, easing raw material prices are expected to increase the margins, and while for the domestic Indian business also, price hikes have been undertaken by the pharma company. Even the CRAM segment, that is also expected to do well. Also today, a lot of news flows coming in, which I'd like to point out. First is Aurobindo Pharma. Their board meeting is there on 18 July to consider share buyback, and also for Piramal Pharma, they have received 0 Form 483 observations for their Ahmedabad facility. For Cipla, they have received a voluntary action initiated from US FDA, while for Lupin, also they have received 0 observations for their facility in Gujarat. Lastly, even Alembic Pharma is in focus, where they have received an ANDA approval for their blood pressure drug. Also, apart from the news flows, if you look at the valuations on a one-year forward basis, Sun Pharma and Cipla range between 26 to 33 times. On the higher side is Divis Labs at 55 times, and Zydus Life, Dr. Reddy's, they trade between 28 to 20 times. And lastly, is Torrent Pharma and Mankind trading between 37 to 46 times. It's 12 months forward P ratio.
All right, that's a check on the Nifty Pharma. Thanks very much, Sharif, for that details. Now, talking about the big stock, the stock which was really buzzing today was Zomato. Zomato has once again hiked its platform fee, taking it to 6 rupees per order now. The food delivery platform has increased its platform fee 3 times in almost a year. Somit is here with all the details.
Well, it's yet another hike on the platform fee that Zomato and Swiggy, both of them have taken. Now, Zomato is the listed one, so we'll talk about that. Now, they have hiked the platform fee from 5 rupees earlier to 6 rupees. Now, they have been continuously within a gap of within every few months, they have been increasing this platform fee by 1 rupee. And if you see nearly in the last 1 year, the platform fee has increased from 2 rupees to 6 rupees. They had started charging the platform fees in August 2023 by 2 rupees. And in October, they increased it by to 3 rupees. In January, they increased it to 4 rupees. In April, they had increased it to 5 rupees. And now they have increased it to 6 rupees. So less than 1 year, they have increased the platform fee by nearly 3x. Swiggy had introduced platform fee back in April 2023, and they are also now charging a 6 rupees platform fee on every order. So platform fee is a flat fee charged by both Zomato and Swiggy on per order, irrespective of the order amount, and this fee is charged to both members and non-members of Zomato and Swiggy. Now, what will be the impact of the same on Zomato's financial? Now, as per analyst, every 1 rupee hike in the platform fee increases the food delivery business's contribution margin by around 0.2 percentage points. And if you see, as of FY24, Q4 FY24, the company had a contribution margin of close to 7.5%. So definitely this will increase. And on an absolute basis, if you see, the company does around 19 crore orders on a quarterly basis, which the number is what the company has been clocking for the past few quarters. So on an annual basis, this hike could definitely increase their EBITDA by around 80 odd crore rupees, which is nearly 6 to 7 odd % of their EBITDA amount. So that's the kind of financial impact or financial bump up that we can see on the back of this 1 rupee hike done by Zomato on the platform fee.
All Alright, then let's talk about the big event that's just around the corner. We're talking about the union budget. Let's shift focus, talk about an ET Now exclusive then. All eyes are on the centre's PSU disinvestment strategy. The government is unlikely to set the divestment targets in the upcoming budget. Let's go across to my colleague Prakash Priyadarshi, who has all of those exclusive details about what we can expect in the budget and its announcements. Prakash.
Yes, we are learning from our sources that the government is unlikely to set any specific disinvestment target in the forthcoming union budget. Sources are informing that the disinvestment transactions will be taken forward based on the market conditions. In fact, the government will adopt a calibrated disinvestment strategy going forward, and the focus will be on the capital formation and value generation in the PSUs. Sources are informing that the government is elated by the increased dividend collection from the PSUs. Therefore, there is a change in policy which is visible on the ground, and the focus are being given on the value generation in the PSUs. As you are aware that the government did not mention a specific disinvestment target in the interim budget. In fact, it has set a target of rupees 50,000 crore from disinvestment and asset monetization put together for the financial year 2025. And a similar kind of approach is likely to be adopted in the forthcoming union budget, which is full-fledged budget as well. However, sources are also informing that the ongoing disinvestment transactions will be taken forward, and the government would like to complete some of them during current financial year.
All right, thanks very much, Prakash, for all those details. Many of these stocks are over the moon on this stock only, on this news only. But what do it means for the PSU stocks going forward? Let's revisit Nikunj, our editor-in-chief, his take on the same space.
Well, the reason why this is important is that this also means that government is not looking at putting a fixed number on disinvestment. The story around disinvestment, frankly, with the exception of 1 or 2 years, has not been great, and that includes government OFS. Hardly any stake sale has happened. Strategic stake sale has happened. BPCL did not see light of the day. IDBI Bank has been put on the bank burner. Container, yes, no, yes, no. It's moved to Container Corporation, has moved to I don't know. So nothing's happened on this investment front. In order to meet the disinvestment numbers, then there is always this mad scramble towards the year end where dumping happens in PSU stocks. Then markets always fear that, okay, if stocks are high, there would be an inconsistent and a constant supply in terms of government paper. Now, if government is assuming that there would be no disinvestment target, there is no compulsion, then the physical maths will have no hidden, numbers, no compulsion. And the fear for some of the PSU that government is going to be looking at selling stake, I think may not be there. Having said that, if something happens, government will raise money. I mean, this is the easy way that you want to raise money when defense stocks and railway stocks are at an all-time high. But one is need-based, second is compulsive. The compulsive nature in this case, I guess, is something which could be taken a hit back if the numbers do not tally up in terms of the union budget. Look, there's a deadline in which you have to meet your financial numbers. And then budget exercise becomes, then the budget maths becomes a compulsion. And we've seen that happen when HPCL was merged with the ONGC, PFC, RFC merger, a lot of government OFS, Suti stake, which has happened in a lot of companies. All that has happened periodically, which may make the market nervous. And if there's no target on that front, then that will just make markets assured that there is going to be no pent-up supply or inconsistent paper supply from the government, at least on that front.
Dalmia's take coming in on divestment being seen or expected rather in the PSU space. But let's move on. We already highlighted a bunch of stocks that were abuzz in today's trade, but my colleague Gaurav is joining us with yet another list of all the stocks that were buzzing away on the back of individual news flows or their earnings. Gaurav.
Well, yes. Let's begin with Hindalco, because the company is going to sell its land which is situated in Maharashtra, and the value of this sale is going to be somewhere around 595 crore rupees, and this transaction is likely to be completed in 3 months, and that is why this stock is going to be in focus. Next, let's talk about Varun Beverages, because company is going to manufacture, distribute and sell snacks in 2 new regions, which is Zimbabwe and Zambia. Now, in Zimbabwe, they will start the operations before October 2025, and in Zambia, they will start the operations before April 2026, and the total capex is likely to be somewhere around 120 crore rupees. Next, let's talk about some of the stocks which are buzzing on the back of the Q1 results. First, let's talk about Bank of Maharashtra, because this bank came with a strong set of numbers. When we look at net interest income, that increased almost by 19.6% on a YY basis. PAT increased almost by 46.6%. When we talk about asset quality also, that also improved, because GNPAs have improved almost by 3 basis points on a sequential basis. When we talk about gross advances, there also we have seen a strong growth of around 19%. And lastly, net interest margins have also improved. And on back of this news, we saw this stock was trading in green today. Next, let's talk about HDFC Life, because we saw PAT increasing almost by 14.9% on a YY basis. When we look at VNB, that has increased by 18%, and total AP has also increased almost by 23%. Lastly, when we talk about VNB margins, that came at 25.1%, which was actually higher than what the street was expecting. And lastly, let's also watch out for HDFC AMC, because this company also came up with healthy set of numbers. Revenue increased almost by 11.5% on a sequential basis, while PAT increased almost by 11.6% on a sequential basis. So definitely watching out on these counters in coming days as well, on the back of the strong update that we have from these counters.
Thanks very much, Gaurav, for all that list of stocks that were buzzing in trade today. That's all in this edition of Your Trades. Stay tuned to ET Now for more updates.
All right, Sandeep Tandon joins us now, founder of Quant Mutual Fund, and let's connect with him. A lots to talk: markets, update on the regulatory inquiry, flows, the really so-called action from retail investors, and how the AUM is moving. So, Sandeep, nice to have you back on ET Now. Thank you for joining us. I'll have to start with the obvious, which is that Quant Mutual Fund came under investigation from SEBI. Why? What is the status on that?
See, Nikunj, to be candid with you, since it is an investigation matter and regulator is looking into it, I will not like to comment beyond that. We have already disclosed there was an inquiry about it, and we have been cooperating. And beyond that, we not like to comment on the regulatory matter. But business is as usual, and we have grown a lot. Our AUM is lifetime high, NAVs are lifetime high. So participation and investor has really supported us in difficult times when the noise or narrative was there. Okay, so we continue to put in our efforts to generate superior risk-adjusted return, what the way we have been doing our dynamic style of money management, and we have been reasonably successful in generating this sort of alpha for our 80 lakh investors now of the folios which we have.
Appreciate my curiosity and everyone's curiosity on this whole matter. That what was the last update from a regulator? What have you heard from the last, and when do you think there would be an outcome to the inquiry?
See, as I said, Nikunj, it's a process which takes its own sweet time. So I'll not like to comment on that. You know, it is a regulatory process, and then it continues. Okay. So that's the only thing. If as and when something happen or development, we like to share that. As of now, the investigation is on, and that's it. That's the way we like to stop it, and we like to continue on the market side. Our business is as usual. Whatever we are doing normally, everything remain as it is.
Could you tell us more about your schemes then? Have you had inflows, outflows? Have you added new customers or new investors?
So obviously, Nikunj, when such noise happens, so obviously we have seen some redemption in the first 3 days. So first 4-5 days we have seen net outflow. Last 2 weeks we have seen net inflow. So inflow has been more than the outflow. And if you really look at in last 3 weeks, okay, that's a disclosure we made. I think we have seen around closer to 700, 689 or 686 odd crores outflow happened totality. And something similar number was there on equity. So it has not been very meaningful. Yes, first week we have some redemption, but it's stabilized. Last 2 weeks has been positive. So net in last 3 weeks, the net outflow is a very small amount of 686 or let's say 700 crores round up. But good news is that retail investor confidence remain with us. We have not seen any. Yes, first few days there was a lot of inquiries, mails, and other things. Later on, everything is said. Our team has handled it very well, and our investor servicing, our business side, marketing team, everything has put in efforts to clear the air. And we have been, and I think what I really appreciate, the investor has really supported us. Okay, in difficult time, the real test comes how ultimately your investor reacts. Okay, so we have not only generated our good return, that journey continue. Investors' faith remain with us, and that is a big thumbs up for us that retail is supporting us. And then we are continued our fiduciary responsibility, what we are known for, a dynamic style of money management. We're putting our efforts because we are known for research capability, predictive analytic thesis, our VLRT framework. So all those theses has played out very well. Some of the big calls which we made in last few months played out very well. So I think net we are able to generate. See, the business is about superior risk assets, superior risk adjusted return, and that is our focus area, has been there for a long period of time. You know, Nikunj, I've been in this business for 33 years. So it's a 33 years of journey in terms of research, predominantly research out, but ultimately in this country, nobody pays risk for the research. So you have to build business around that. Earlier it was broking, wealth management, investment banking. Now it is the mutual fund business we do.
Sandeep, good to have you on the show. Congratulations. I mean, despite all the turmoil and the weekly outflow which we saw, now you are getting inflows back. I see the data that your AUMs are nudging 96,000 crore. So who will go to 1 lakh first, your AUM or Sensex?
I think to be candid with you, Ajay, we have never targeted the AUM. Our focus has always been on the performance. So, and we were very early, if you recollect, right from end of 2023, we have talked about that in 2024, when I think on your channel or multiple channel, I talked about that. We expect minimum 24,000 Nifty and minimum 54,000 Bank Nifty. I think we came closer to those mark, and Bank Nifty corrected, and Nifty is even higher than that. And again, I'm used the word Nifty. So it was like, if you really go back and maybe 8 months back to talk, 9 months back to talk about how 2024 will be. And I think it's played out. So a predictive analytic thesis has played out very well. We remain very constructive on the, I think 24,000 is a more of a psychological number. Whether it's 25 or 27 doesn't matter, but directionally is up for India. So we remain very constructive for India as equity and asset class. And if you really look at, people have been very, very skeptical for last 1 year. Okay, I have been hearing this noise. Okay, the valuations are expensive, which is no doubt about it. But when you have to look at valuation in isolation, you don't get answer. That's why we always talk about how liquidity is rising. Okay, if I have to talk about money flow towards global equity is at the significantly high levels. It's still increasing. Okay, if I have to look at in quarter on quarter, year on, that's actually rising. Risk appetite is equally constructive. For India, risk appetite, surprisingly, is still very constructive. It's actually inching up, where global risk appetite have slipped a bit. So India and certain emerging market risk appetite is still rising. That's the reason we remain equally constructive, you know. And I have seen that people have been very skeptical about Indian market, even not only the family office, even the FIs, which has been. Look at some of the sector, like recent example was the technology, you know, it reached that under ownership. People have given virtually all the analysts at the bottom of the cycle got capitulated. Maximum downgrade came at the bottom of the cycle. Now 30, 40, 50% stocks have rallied. Now you have seen the reverse happening. The upgrades have started pouring. So I think we as a house really believe in capturing these inflection points when people give up completely. You have seen a capitulative move. That's the time we build very sizable positions. And so is the case with true on the other side. When you see euphoria happening in certain pockets or certain sectors or certain stocks, we do take a contrarian call and try to book profit. So ultimately, it's a game about if you're able to book at the right time and liquidity is on the higher side. So liquidity is always high on the either the higher levels of the market, or liquidity is high at the bottom of the cycle. So if you can capitalize the upside cycle and by booking profit, then I think it works well. And this is what thesis over dynamic style of money management. You always talk about sector rotation, stock rotation. And we have been early in majority of the large names, which are some of the, look at some of the railway stock have performed very well. PSU has performed very well. Large infra call has done. We are very early talked about consumption thesis in January 2024. We launched a consumption fund. And we were 6 months early in terms of taking a call that something has changed. And we talked about in our presentation that rural economy is the cusp of inflection point. They're about to recovery, early signs of recovery. High frequency data was showing early signs of recovery. And we took a very large bet on the consumption names. And look at our portfolio skew toward consumption, our FMCG in particular. It played out. So I think that is the strength of predictive analytics when we talk about, and that really help us in generating the superior alpha, which we have generated over 1 year, 3 years, 5 years sort of period. I think we remain very constructive about India as an equity asset class.
Let's get in your take then as to how you'd read into the entire financial sector. For the longest time, we had seen that some of the large cap private banking names were perhaps stagnant, if you will, and then we saw the momentum creeping in. Of course, now the sectoral change has taken place, but let's talk about public and private banks. What's the stance?
See, you have seen our portfolio that we have been quite cautious, okay, on the private sector bank for not only for last few months, it has been for last many quarters. And we have talked about, because we believe the leverage economy as a concept is declining, and hence banks are byproduct of that thesis, and that it's a de-rating process which is happening globally. It's not only about India. India is like, we have seen extraordinary valuation for this thing. It was a grossly overgrown. So we have been cautious, but that does not mean that if any stock hit any inflection point, extreme hated zone or neglected zone for a while for whatever reasons, okay, we will capture those moments. And we have captured very recently very large moment in one of these stocks also. So I think that is a part of our exercise. But if you really ask me from a, let's say, longer term perspective, if you ask me next few decades, whether banks as a sector, which is 40% of the index today, and if banks exist in this form, whether the weightage will remain, the answer is big no. Okay. Yes, I also believe that banks will also change accordingly, because the way we're looking at the digital currency sort of thing, or central bank digital currency thing, and some of the changes which is happening globally, we believe bank will not exist in this form, and hence the de-rating process. And I also believe the weightage, which if you have seen of 40%, will not be there in next 30 years or 20 years, this sort of weightage. From that perspective, we have been extremely cautious. I'm not saying I'm being negative on the banking asset space. You can't be negative, because given the economy interest which is there and valuations have corrected. Again, it's a relative word. It has corrected a lot. But again, it's a very theoretical exercise whether these valuations are expensive or not. That as compared to globally, they are still very expensive. There's still over ownership is there. We remain very cautious on this space, and appropriate moments we will capture it. But if you really look at in our overall portfolio, I think banks will be less than overall, maybe much less, lower than maybe less than the 10% of our portfolio, the entire banking space in our portfolio as of today.
You bought a lot of PSUs, and especially railways. Do you think there is still value left in some of these PSU stocks, railway, defense?
So Nikunj, we were very early in spotting this trend. Right from September 2021, we spotted value as a thesis, and we always talked about the PSU within the value thesis. The PSU is the best place, because it is very important to understand even when the SEBI circular talked about in the month of February, and particularly how the mid and small cap concern came. And that's the time I also, one of the channel I talked about, I said that ultimately when you have to showcase your report card, your liquidity data, your valuation data on monthly basis, then how as a money manager, you will not like to see your report card getting deteriorated month on month basis, because we were expecting the volumes will shrink, the impact cost was rising, which did play out quite well. And with that background, how to play this thing? So obviously PSUs were relatively cheap. They are fairly liquid. If I want to exit or build a position in any of the PSU, the liquidity is extraordinary. So which was not the case few years back. So I will like to play this thesis, when that's the reason we went overboard and build a large exposure or maintain our large exposure toward this space, because they are fairly liquid, fairly attractive in terms of valuation point of view. Impact cost was on lower side, and they were trading in the neglected territory. Today also many of the PSU people don't like it. Is like a untouchable sector sort of thing, though retail participation is like, but most of the best of the money managers, not only India, globally don't like to touch the PSUs. In general, that's a thesis which they have, from various reasons. But I think I have been very vocal in last few years, particularly last 2-3 years, we are talking about this, something has changed in PSU. But again, from our perspective, we also not married with any sector or stock. Is based on the opportunity, we book profit, and based on the opportunity, we rebuild our exposure or even add new names. So we are pure opportunists. We wherever we see superior risk adjusted opportunity, we will play that opportunity, and we don't have any love and affair or any hatred sort of feeling for any sector or any stocks.
in association with बनेगा तो बढ़ेगा इंडिया, अल्ट्राटेक देश का नंबर 1 सीमेंट, in association with SBI, solid bank की solid backing.
As India awaits the pivotal moment of the year,
निर्मला जी का ये बजट देश के भविष्य के निर्माण का बजट है.
join ET Now for comprehensive coverage of Budget 2024.
इस चुनाव में आप अगले 5 वर्ष के लिए विकास की गारंटी को चुनेंगे.
From tax reforms to infrastructure investments, we bring you the key highlights and expert opinions. Get insights from industry leaders and analysts on what this budget means for you and the economy. Budget 2024. Leap to lead. Only on ET Now.
Hey, careful, huh? My daddy got it from abroad. Disaster! How will you pay for the loss now?
In stock market, you should take risk as per your capacity and knowledge. Trade in options very carefully.
Wow, Dikra! Absolutely perfect. Take risk with full understanding.
सिरिंज, कॉटन पट्टी, इन सब का पेमेंट आपको अलग से करना पड़ेगा.
ये तो ऐसा हुआ कि शर्ट खरीदा, बटन का पैसा अलग, गाड़ी खरीदा, स्टीयरिंग व्हील का पैसा अलग.
Introducing Acco Health Insurance, जो देता है 100% bill payment, no deduction.
हेल्थ इंश्योरेंस की सुबह हो गई मामू.
Sandeep, fair point. I mean, looking at your schemes from a couple of years now, and if one really looks at the schemes, while they've grown big in terms of splendid, effort there and splendid response from investors, some would say that there's a big churn in some of the way you manage money. Couple of quarters ago, Adani was the top holding. Now Reliance is the top holding. Why is that? Unlike a lot of other mutual funds where there is buy, ride, sit tight, buy and hold, there are a lot of churn in your top 4-5 holdings.
So Nikunj, let me explain you. This is the biggest myth which we have grown in India. Okay, we have been taught a word churn, which is generally considered as a negative connotation. Churn, high churn means no clarity of thoughts. High churn means no visibility in terms of whatever you're doing, and you are confused how. That's the way a lot of people look at this data. Now we look at first, and if you read the global textbooks, it's all about concept of rebalancing. Okay, so a private equity can rebalance a portfolio in, let's say, in 5 years or 10 years, and maybe long accounts rebalance their portfolio on a yearly basis. Some hedge funds rebalance their portfolio on a quarterly basis or monthly basis. Okay, and some of the traders rebalance portfolio on daily basis. So one has to look at what is the need. Second most important is that since we live in dynamic world, and I always talked about world is so dynamic, our money management style cannot be static. And we were the first to introduce the concept of dynamic style of money management in India. And when you talk about churn, we link with the risk on risk of environment. At Quant Mutual Fund, we always quantify the risk on and risk off. I have seen most of the places, it is actually a postmortem analysis. Oh, that was the risk on period. Oh, that was the risk on period. Oh, risk off period just peaked out. Because prices have corrected and then you realize that cycle has peaked out. But with the help of predictive analytic thesis, which we have built, and we have been talking about not only the risk on risk off cycle, we also talk about the quantity or the quantum or the intensity of risk on risk off. Okay, let's say example, September 2023. Okay, we were very negative from January onward because India risk appetite peaked out in January. Since then, we were cautious and we talked about by September 2023, India risk appetite should bottom out. It did bottom out in September, October. And since then, we were relatively more aggressive in terms of building high beta names in our portfolio. And that thesis played out very well. So it's all about risk on risk off environment. And if I'm able to see or foresee a risk on risk off cycles well, then if I'm rebalancing my portfolio, reconstruction my portfolio, actually, Nikunj, we are reducing the risk for the masses. For our retail investor, our investors in general, the risk profiling has been reduced. Whether it leads to higher churn, so-called perceived word churn, I think churn is good because it actually protects my downside. So when you talk about in our VLRT framework, risk is the most important aspect. Okay, so we very proudly say we are in the business of risk management. Returns are byproduct. So it's up to us how we manage risk. And the challenge with the industry is that majority of the people or the masses chases the returns, not worrying about the risk. We as a house So we talked about like how known risk is something is known to people, how unknown risk can be manageable, how we talked about very recently talked about how perceived risk works. So we have been working, we're releasing a note on the perceived risk also, how the perceived perception works. So it's a very interesting way how you manage your risk. Ultimately, this is the business of all about risk. And it's so churn is a part of that exercise where, and if you really look at, let's talk about, since you give an example, let's say I'm not quoting names, but even when you look at some of the large holding with ITC, it's in the public domain, we had a very large holding in the past. Okay, we sold off those holding when we believe the cycle is peaking. And then we bought Reliance Industry, today is the topmost holding number across. So Reliance rallied 50-60%, where ITC corrected 30-35%. So I think if you really look at the largest holding, if I'm able to gain something extra in last 6-8 months, I think it's a great strategy. So I think as an investor, as a community, we should remove this thesis from our mind that churn is bad. Okay, we have to look from a risk management perspective. If environment is changing and risk profiling of the sector or the country or a stock is changing, okay, and when there is various forms of risk which you look at, and if something is changing purely from a risk perspective and you have to reconstruct or rebalance or redesign your portfolio, I think it's a healthy strategy. It generates better, superior risk-adjusted return. I think from a risk perspective, this is one thesis we strongly believe, and it's a more from a risk management thesis. So like even our thesis about timing, a lot of people consider timing is bad. Nobody can time the market. Time in the market is good. Yes, I agree. Time in the market is your experience. But timing is an analytical tool. Timing is not looked at from a trading perspective. Timing is a pure analytical tool. When timing analytics is a function of liquidity analytics, a function of risk appetite, is a function of valuation analytics. And when multiple data points are skewed in one direction, it leads to a better timing and hence better or the lower risk, so which leads to a better superior risk adjusted return. So I think the whole thesis people have to change. And this is one philosophy. We go and educate hundreds of our distributors and a retail investor. If something has changed globally, look at US market. How beautifully it has changed. Today, people start cribbing, oh, algos are running the show. Okay, AI coming, ML is taking over. Ultimately, we have to change this time. It's about analytics. It's not about whatever terminology you want to use it. It's all about analytics, which is playing. And I think everybody should invest. And that is a Quant as a house. We call it, so we are analytical house. Business is byproduct. What we do, this is a passion. And business is byproduct. So once you start getting into that aspect, people will appreciate. And this is something, at least we are very happy to say that our masses, retail investor has really understood, okay, as compared to the family office or ultra HNI, they have not understood our thesis that well the way retail investor has understood. And we are able to generate alpha for them and better risk-adjusted returns.
Sandeep, I know that your strategy, of course, is looking at sectors and stocks at those extreme inflection points. So I'm curious to understand your outlook when it comes to IT in particular. Do you believe that it has reached that inflection point? Would that be a contra call? What's the stance at the current juncture?
So the way I look at, yes, it has reached a neglected territory sometime back. In fact, you asked me, it was in September 2023 itself when you saw extreme sort of neglected phase and some capitulation happened, something similar happened the beginning of the year also, when the majority of the analysts downgraded by the end of first quarter of 2023, okay, 23-24. That's the time we saw cap. But I will also agree that when you look at from the earnings visibility point of view or traction point of view in the business, still on the lower side. Okay, so because cost cutting happened, margin expansion happened, and US market has also recovered. So some signs of early signs are there, and that's the reason since the stock was trading in the most neglected territory, and they have recovered significantly. We have been I will not say I'm extraordinarily bullish in this space, because we see that risk-adjusted opportunities are far superior in other sector, because this is a more of a pullback rally, more of a reflex rally. I will not call it that something has changed from a longer-term perspective. So we are constructive, but we are not as optimistic for the sector as it was there in September 2023.
So let's understand a very broad general framework, which is that we are feeling excited about what's happening in defense, railways, what's happening in India. But the grain of the truth is that global markets are also in a fine fettle, so to speak. what are the chances that given that we have US elections and we have a lot of other elections in Europe and in US, this entire party and equity market itself could come to a stall. So this could be global in nature, which could affect India then.
So, Niku, it's a very good point. I will say let's break this thing for 2 minutes from a global perspective, okay, and India, and maybe talking about DM. The larger thesis is, first of all, maybe from whatever something is changed for us, what we have been seeing, talking about that mild risk-off period, not in India, but in global market. We believe all multi-asset classes, the cross-asset, cross-market data which we look at, it's giving a early signs from a predictive analytics model. We can say we are getting early signs that the global volatility, all asset classes will start spiking or rather inching up going forward. Okay. Now it is very difficult to pinpoint this week, next week. Okay. But we are reaching that phase where most of the employed walls data is showcasing they're ready to move up. What it means for us in India and from a global perspective, and then let's add, okay, the compliancy part. Okay, if I have to look at the compliancy in US particularly in the technology stake, if I have to talk about the NASDAQ 100 instead of looking at the composite or even some narrow indices, if you can look at, we are seeing early signs, or not even early sign, we are seeing that compliancy, Quant compliancy indicator actually started spiking. And that is something which is worrying us because in India, people are worried. Okay, if people are skeptical, earlier they're skeptical about the elections result or the polls outcome. Now they are worried about the election, the budget related challenges. So in last 1 year, because this year has been seeing on the geopolitical 35 countries going for election. So there are changes. Now, what we have to look at, if I look at in totality, then we don't get answer. When you look at dissect this whole data, then you get an answer, because this is a phase which you're talking about, that some asset class will go up. And within some asset class, certain pockets will do very well and certain pockets will not do well. So let's look at the risk appetite point of view. The global risk appetite for US and some of the developed market has actually started drifting a bit. Okay, that's the one sign of caution on the global market. But if simultaneously I look at the emerging market is actually rising, and so is the case for India. Even if I look at the sentiment data, okay, more from a data perspective, I look at the India sentiments data, is still remain quite constructive. The good news is that the global liquidity, and particularly if I dissect the liquidity, the money flow towards equity and asset class, I think that is something which I have seen, it is actually rising. Globally, it is rising, particularly US developed market. It's not only confined to just India. People look at, we look at, since we are a global house and we look at the global research house, and we look at the data very closely. So money flow towards equity as an asset class is actually inching up. Now, given the background, we are saying that employed walls or various asset classes can spike or can move up, can lead to a risk of phase in certain pockets or certain markets. Okay, but if I look at totality, yes, it's something we should keep at the back of the mind. But if I look at Indian isolation, then we don't see any challenges. If Indian market correct, it will correct more from a global perspective rather than from a local perspective. India, buy on dip thesis continue. Sector rotation, stock rotation thesis will continue. And we remain equally constructive. Let's talk about commodities for a minute. Okay. Now, when I'm talking about this sort of choppiness picture is visible, the compliancy for gold, silver, and copper is actually rising. Okay. So the data points are more compliancy is sort of sign, where within the metal space, base metal is showing mixed signs. If you talk about the energy basket, oil is giving signs of picking up, but gas is giving signs of rising. So it's very interesting way look at some of the soft commodities. If you look at within the grain and soya is looking like correction, where coffee and sugar is in a different perspective. So I think it's a very unique period where all the asset class will showcase this theoretical, this correlation a lot of people look at will not work.
Thank you, Sandeep, for joining in as always and giving us an in-depth view into your outlook for the markets and, of course, for clearing the air.